Good day, Money Masters and Treasure Hunters. Welcome to the February 18th, terrific Tuesday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom as he makes his way back from snowy New York City, where he hosted a live trading event at the Traders Expo today. For those of you not familiar with me, I'm the morning anchor at TFNN. I kick things off at 9 a.m. for the first 2 hours of the trading day. I use a set of tools to call the market each day. They include my own proprietary trend-based trading signal system called the Rhodes Momentum Indicator, because I believe the trend is your friend. In fact, your best friend. And you don't need to be a technician in order to use this system, folks. Just a simple, easy way to follow the market. I also use leading indicators to help us identify where the market is going to. We're certainly going to be taking a look at those. Some of those are A to B equals CD patterns, Fibonacci expansion, and retracements, which together, those are what form the Gartley and butterfly patterns. And, of course, I use Japanese candlesticks, which are really the byproduct of the sign makers in the market, the bulls and the bears. Of course, all these are just tactics. And they're meaningless without a strategy, and that's where my money management system, what I call the power of 1%. It's a mathematical tool that I've developed it 30 years ago, and something that needs to be a part of your trading and investment system as well. I also have a newsletter service called Mastering Probability. It's out by 8 o'clock each morning. Covers the futures, forex, commodity, stock markets, the whole thing with all the different trade setups that are out there. Now, enough about me, because this show is all about you, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is a tool I call accelerating your learning curve. From birth up until about the time we are 18, our learning curve is dramatic. And our capacity to learn, well, it's staggering. We learn a tremendous amount very fast, and then things just simply trail off. If there are no more exams to take, why read any more books? Now imagine what would happen if we kept up an accelerated learning curve like that for the rest of our lives. Imagine what we would learn, the skills we would develop, the capacities that we would have. Here's what I'm asking you to do from this day forward. I want you to feed your mind just as you do your body. Feed it with good ideas wherever they can be found. Make it your mission to learn one thing, just one thing, each and every day, and then jot it down on your memo pad or a pad of paper. And then, a year from now, go back and take a look at it. You will be amazed at all of your newfound knowledge, folks. That is called accelerate your learning curve. Now let's go check out the acceleration, if there was any, in these markets. Our call number is 877-927-6648. You can give me a call. Be happy to take a look at your stock chart. We had the Dow finish off 24 points, trading and closing out at 16,130. The S&P up 2 points, trading out at 1840. Let's start by taking a look at the S&P 500, closing at 1840.76. What's it doing? It is into the swing point high from January 15th. The low of that swing point, 1840.52. You close at 1840.76, regardless of light volume, which is what it had today. You close inside a swing point. What's that mean? It means it can go up and it can test the highs. 1850.84 looks to be the next stop here for the S&P 500. That's what's going on there on the daily charts. Let's go back and take a look at the Dow. The Dow, really a sideways move, traded out at 16,130, so it did not have any conviction to the downside, nor did it have any conviction to the upside, just simply a sideways resting move. It's made a nice move off of the bottom, out of that 15,340 level. It is up above the 0.618 retracement. Remember, I said we use as leading indicator tools out here are retracements and expansions. This is a retracement. And if we take a look at the retracement coming off of the high here from January 21st, out at 16,520.60, down to that low at 15,340.69. That old doji candle on February 5th, you can see that price has sliced its way through that 0.618 retracement level. That says next stop, likely next stop here for the Dow, is going to be 16,268. And if it can make the charge at 16,268, well, then it can get all the way back up to the swing point that we're using right now in order to be able to determine that retracement level. And that gets us back to the January 21st level. That's not the all-time high. The swing point high out here would take you all the way back into that December 31st level. But one thing at a time. That's what's going on with the Dow. Let's go take a look at the NDX 100. The NDX 100 today closing up A total of 15.55 points, up 0.4%. It closed at 36.78. Its intra-session high so far, 36.85.18. Now, its next stop is not that much higher. That would be the expansion side of our Fibonacci ruler out here, and that would be the expansion of swing points from the January 22nd high. That's out at 36.34, all the way down to the low that was put in on February 5th. That's at a price level of 34.18. It's made its way beyond the swing point high from January 22nd, and now it's trying to do the expansion. Well, the first expansion is your 1.272 expansion. That number, 36.93. If it gets above that, the next level, the next target level that you would use would be 37.68. That would be your 1.618 expansion of its last set of swing points. That's on the NDX 100. Let's go check out the New York Stock Exchange. In fact, we need to not just check it out. I need to see how many net advancing issues we had today. Well, you had 1,025. That means the price oscillator is going to move higher. That means the summation index is moving higher out there with good market breadth out there. Now, New York Stock Exchange, you say, what is it doing? I'm glad you asked me that question. What it's doing, it's dealing with the swing point from October 11, 2007. It tested that area, in fact, on a daily basis on December 31st, was able to get up above that level. Of course, it did that when we came back to the markets on January 2nd. It actually created an island reversal candle formation. That was a very bearish signal. Now, all those folks that were stranded on the island, they were rescued here on January 15th. So that island reversal candle formation no longer exists out here. It doesn't exist inside of my book. But what the New York Stock Exchange is trying to do, its next resting spot, is likely going to be the highs at 10,387.17, closed at 10,319 out there. It wants to go tag that. What we're going to watch for is whether or not can it not only tag it, but can it get above that level? Because if we see it close, and I say not just on a daily basis, we've already seen one close on a daily basis. This is a shortened trading week. We'd like to see it close. Well, if you're bullish, you want to see it close above 10,387.17. You want to see it on a weekly basis, and that would be the last index to break out of its consolidation levels, and that would be extremely bullish. Whereas another test of 10,387 and its inability, I should say, to catapult that area, that would say, okay, we got more work to do to the downside. We got more recharging of the battery, so we want to be paying attention to the New York Stock Exchange. If we go take a look at the NASDAQ composite, it closed up today a total of, where's the composite? It closed up 29 points, up 0.7% out there. Closing out at 42.72. Its next up is 43.22. That's your 1.272 expansion of its last set of swing points. That being the January 22nd high, 42.46 and some change, all the way down to February 5th out at that low of 39.68. Its next up, 43.22. You closed at 42.72. That says the NDX 100. In fact, if the composite's going to move up to this level, the NDX 100 will probably get to that 1.618 expansion out there. If we go take a look here at the Russell 2000, you talk about the little engine that couldn't, but now is. That is the Russell 2000, closing out at 1161.46, already making it all the way back. Didn't think that it would have enough strength to do it, but it has. The 0.786 retracement. So that's what it's made. That number, 1160.78. So that's where it's at. It's dealing with this waterfall downdraft day, the gap down day on January 24th out there. In fact, let's switch over. Take a look at the ETFs because, as my good friend Lee Corso would say, not so fast. I've just given you the bullish side of the market out here, but one thing that we have to be paying attention to, and it's the Qs. The Qs today did volume of 29 million shares, so we had a bunch come in during the last 5 minutes out there, which was important. And the reason why that's important is because the Qs have this very interesting pattern out here, and it's one where volume truly is your friend. High volume lows are bottoms. High volume lows. If you take a look at the trading session here on February 3rd when the market was moving down, you had the Qs moving down with 65 million shares, and typically that session or within 2 trading sessions, you will see a bottom form inside of the Qs. You don't believe me? Go take a look at the December 18th time frame. You'll see 68 million shares there. That made a nice bottom. You don't believe me there? Go take a look at November 7th as the market was moving down. 52 million shares. That made a nice bottom. You don't believe me? Well, go take a look at October the 9th out there. Big volume at 64 million shares. Well, guess what? The Qs make highs on light volume. Back here, the most recent swing point high, January 22nd, that had 29 million shares. Guess what we did today, folks? 29 million shares, light volume at the highs. That's one of those signatures of tops inside of the Qs. 877-927-6648. We'll be right back.